Hey, it's Mark Ferguson with Invest for More, and I wanted to go over the March 2025 monthly housing report from Realtor.com. I try to do this every month. Sometimes I don't always get there, but it gives us a really good idea of what the real estate market is doing. Now, I have not looked at this yet, so I'm going to look at it with you guys while I'm doing this video, see how it looks. And I keep hearing all over, well, inventory's up, market's going to crash, tariffs going to kill everything. There's always doom and gloom out there. But I really like looking at the data and seeing what's actually happening. And these articles give great data because it goes back 7-8 years of data we can look at. Now, me personally, I'm a real estate investor. I'm a house flipper. I'm a business owner. We have gotten 4 properties under contract to sell in the last week. One of those being a commercial property. And I just signed a commercial lease in the last week as well. So as far as I'm concerned, the market is still very, very strong. Other agents in my office also have said things seem to be getting stronger and picking up right now as far as buyer activity and sales. So it's kind of completely different from what I hear about the economy being bad and markets going down and real estate headed for a slump. I could be wrong. This is just regional in Colorado, but let's see what this article has to say. All right. Pending home sales, homes under contract fell 5.2%. Inventory of homes rose 28% year over year, which is a lot, but like I said, it's really good to see these charts and compare year over year. Total number of unsold homes, including those under contract, was up 17%. New home listings increased 10%. The national list price of homes was $424,900, unchanged from last year, while the price per square foot rose 1.3%. So that's something interesting too, because a lot of people look at just the median price, but builders have been building smaller and smaller homes. And not only that, but I feel like more low-end homes are selling than high-end homes now, which also means even though the median price might go down in some markets, it's really important to look at the price per square foot, because it could be just smaller houses are selling, and that's why your median price is going down. It's not that the same house is worth less, it's just that less valuable homes are selling, which pushes your prices down. Homes spent a median day of 53 days on the market, 3 more than a year ago, and 17.5% of listings saw price reductions, the highest share for any March since 2016. So that'll be interesting to see what that looks like as well. We'll check that out. Dip is rates and uncertainty. I mean, really, if interest rates would go down significantly, I think we'd see a pretty big boom in the market. And a lot of people say, well, if you do that, then prices will go up, so we can't lower rates. Well, if you just keep the rates high, you're just building a dam of buyers that builds bigger and bigger and bigger, just waiting for rates to drop. And as soon as they do drop, that dam's going to break. And the longer you wait to do that, the bigger that buyer pool behind that dam is going to be, and the worse it's going to be. Plus, the longer rates are higher, the less building there is. If they would lower rates, there would be more building, which would help the market as well and inventory problems that we have. So, all right, active listing count. Okay, so this is homes for sale. This gray line is 2025. This is 2024, 2023, 2021, 2022, and then up here we have 2018, 2019, 2017. So you can see there was a pretty big increase of homes actively for sale. However, it's still lower than 2020, 2018, 2019, 2017, and significantly lower than pre-COVID years, which were pretty tight on inventory years. People think pre-COVID was normal, and it's definitely more normal than now, but it was still very low inventory historically. If you go back to 2006 to 2009 when the housing crash happened, there was 5 million houses for sale. 5 times what they had in 2018 to 2020, and we're still 30% below that. So when people say inventory is rising and a crash is coming, we're like, 6 times lower than what inventory was before the last crash. Nowhere close to it. So yes, a little bit more inventory coming on, but still below normal. And this chart is still very close to what these were as well. So it's very close to last year too. So even if we keep raising and rising up here like we did last year, we probably get to a normal level. But again, if they decide, rates need to drop or something happens, and that could drop again. And the kind of the catch-22 is, okay, if you think the economy's bad, if housing starts dropping, they're probably going to lower rates. And if they do lower rates, then that's going to kind of push a lot of buyers back into the market. And then if housing prices don't drop and the economy isn't bad, people are probably going to keep buying houses with the current rates. And so you probably won't see a big, huge glut of inventory either. So it's almost like a hedge that real estate has against itself. All right, total listing count. So total homes for sale, under contract, and not under contract looks almost exactly the same as all of these years of last year. Different than 21, 22, 23, but those were crazy years. Nothing weird there. So I wouldn't be too worried about that. Still well below where we were before COVID. Here we have newly listed homes. There we are, right there. Okay. So these are homes coming on the market, and you can see it is higher than last year. It is higher than 2023. But then you look at this. Every single other year, it's almost like maybe slightly higher curve than some of them, but almost exactly the same curve as those other normal years. So basically what we're seeing is we're getting closer and closer to normal, even with high interest rates. So again, nothing crazy here. It's not like it's shooting straight up or abnormally different than almost every other year. Of course, 2020 was a crazy year. We can throw that one out. Keep going through those. All right. Days on market. This is one that's always interesting and helps people know how long it takes to sell a house. And you can see real estate is very cyclical throughout the year. Again, that's another thing people will tell you all the time. Prices are down. Prices are 5% lower than 3 months ago. Look, we'll look at prices later, but if you're looking in December to like October, yes, every single year prices drop like that. So you really want to look at year over year, and that's why I love these charts. But anyway, okay, here's our gray line. March 2025, days on market, significantly dropping just like every other single year. The chart, the lines look exactly the same as every single other year. Nothing abnormal here. Slightly higher than last year, yes, but still below those kind of air quote normal years before COVID, but still had incredibly low days on market compared to history. If you look at kind of pre-crash and stuff in the early 2000s, days on market was like 250 days, right? 5 times more than it is now. All right. Home prices hold steady, but sellers are cutting more often. Let's see what they say. All right. So here's our gray line right here. I think that's it. It's kind of hard to see. What's interesting about this is prices are actually rising a little bit more in the start of the year than the last couple of years. You can see we were slightly below prices in January, February. Now we've kind of caught up and they're the same. So when people say prices are decreasing, they're not. They're actually going up just a touch faster than they have the last few years. Nothing like 2022, nothing like 2021, or 2023 was pretty similar because that's when rates went up. But then these years too, very similar. And then what you'll see is an increase until we get to about June, and then almost every other year it flattens out or starts to decrease, except for 2020, which was crazy. Like I said, if If you take your price in December and say, oh, prices are down 5% compared to 2 months ago. Yes, that's what happens pretty much almost every year. But then they go back up again in the spring. All right, price reduced share. That's what they said was high. So let's see. It is. Okay, this is the first time I've seen any of these numbers or parameters be like more than normal. And so 17.5% of houses had a price reduction, which is higher than pretty much every other year. And that's tricky. So 2019 was going down. 2023 had a reduction. 2020 had a reduction. 21 had a reduction. 22 had a reduction. 2024 had an increase. 22 had an increase. And 17 had an increase. So these are kind of all over the place if you look at the trends of going up versus down. So in this 22 right here, this is when interest rates started to go up. That's that big change right there. So, I mean, this is the only number that could be slightly worrying, but based on all the other numbers we looked at, I personally would not be too worried about this. It could be people are pricing their houses too high. There's just so many different reasons that this could be happening, and you aren't seeing prices really drop. You aren't seeing days on market going significantly higher. You aren't seeing total listings or anything going significantly higher. It's just this one kind of anomaly. I don't know. Maybe, maybe not. So this is kind of the first one I've ever seen that really was significantly different. And by significantly different, what do we mean? 3% different? So I guess you could say that's slightly worrying. But again, it will be interesting to see what the current trend does and what happens. But like I said before, like worst case scenario, if we look at worst case scenarios, let's say all these houses come on the market. Buyers decide they don't want to buy right now for whatever reason. They're scared of tariffs or they're scared of the economy. They think everything's going to collapse. So then we get more inventory. We get higher price reductions. Let's say prices drop 5 or 10% year over year. Because you got to remember, there's still a shortage of housing. Like there's still not enough houses for all the people out there. So it's really hard to see significant price drops when that happens. It's really hard to know where all this inventory would come from too, because they are building fewer houses and people still don't want to lose their 2 or 3% rate. So, but we're saying worst case scenario, somehow we get all this inventory. Like I said, if the economy's that bad and people are that scared and house prices drop, it's extremely likely the Fed, I said Fred because Fred provides a lot of great data on the Fed, but the Fed would almost certainly lower interest rates. And once they do that, you would really boost the buyers again to come back in. So if we did have a worst case scenario of a real estate dropping, it's probably going to be extremely short-lived unless the Fed just decides, nope, we're not lowering interest rates, we're going to be stubborn and we hate Americans. That last part I probably shouldn't have said, but for whatever reason, they are very stubborn. They decided to raise rates faster than ever in the history of the United States, and then they've taken an incredibly long time to lower them, even though inflation has been below the historic average for inflation for almost 3 years now. The peak of inflation was June 22, and I'll show you this. Why don't we just go to Trading Economics and show you month over month inflation, because this gives you a really good look at what inflation did. And we'll go out 5 years. Are we month over month? Yes, right? There we go. Okay. So let's go out 10 years to start. Here's where we were with inflation until 2020. Had crazy 2020, destroyed everything. Then right here, boom, December of 20 and January, we started seeing inflation go up. So for 2021, we had higher than normal inflation, really peaked in March 2022. And June was kind of the last high inflation month. So this is our inflation period right here of just over a year. You can see over here, we always have inflation, prices always go up. That's how the world works. If you want your wages to go up, prices of goods have to go up for businesses to afford that. And even here, we had a little bump. Well, you also had a high bump in 2018, same bump. And the Fed and a lot of people have said, this inflation is way too high, we have to keep rates high. It is almost the same as this, slightly higher than what we had before. And not nearly enough, in my opinion, to justify hurting Americans, hurting people trying to buy homes by having interest rates so high, hurting people who have to refinance by having interest rates so high, hurting people because builders won't build because rates are so high because they're scared buyers won't buy. Their costs go up when you build because interest rates are high because builders use loans. The companies they buy materials from use loans. High interest rates make almost everything more expensive. I know people don't agree with me on that, but I own a business, and high interest rates have made our goods more expensive and our costs more expensive because the cost of money has gotten more expensive. And we can't just lose money and stay in business. You have to increase your prices to pay for those increased costs. So again, a little bit of a tangent here, but inflation pretty much peaked almost 3 years ago, and the Fed has just kept rates. They've lowered them, twice, I think? But mortgage rates have barely gone down at all since then. So I say if the economy goes bad and is awful, the Fed will probably lower rates. I think they would, but again, there's no guarantees because they haven't done it so far. All right, there's my housing market update. There's what's going on in the real estate world so far. They'll have an April report out very soon. It'll be interesting to see what that looks like. And of course, we'll have more videos on the liquor store, flips, laundromats, commercial properties, rentals, all that coming up soon.